Shimon and everyone, and welcome to the Hardcore Finance Show. We are seeing if we're going to go live, but I'm not sure if we're going live. So we'll see what happens. But how are you, Shimon?
I am doing fantastic, whether we go live or not.
Hopefully we do go live, but it's been a while since we've talked. So we should catch up, and a lot has happened. All-time highs, pension funds,
Hell yeah.
Rand
Hell
Paul.
Yeah. Hell yeah.
Rand Paul. What else has happened? Lots of interesting things in crypto.
ETFs.
ETFs.
What else was interesting? The pension funds are fascinating to me, but yeah, so pension funds, ETF, China banned mining. China is considering unbanning mining, which is the new thing that happened.
No, really?
Yes.
I didn't know this.
Yeah, they were
when
like,
did this
oops,
happen?
We made a mistake. Yeah, I think that's yeah, pretty much. Oh, all-time highs on the NASDAQ. I actually didn't check the S&P, but the NASDAQ definitely hit an all-time high today. And our thesis is playing out, which if you guys remember, if you've been listening to us for the last year and a half, even before COVID, we basically said technology will grow faster than traditional. And even now with the infrastructure bill, oh, that's another thing that's happening. They're trying to figure out how to pass the infrastructure bill. And from what I understood today, something happened. I'm not huge into politics, but they decoupled the infrastructure bill from something else that they wanted to tie to it. That's all I know. I don't know if you know more than that.
Interesting. No, I don't know actually. I'm looking at, we're at the all-time high on the S&P. It looks like, let's see, 52-week high 4598, and we're 4574. So we're scratching and itching our way, clawing our way to the all-time high. I think
I know for sure NASDAQ hit it today. Maybe it afterwards came a bit down from the all-time high, but
yeah. Oh, you know what? It was today. Yeah, it hit today the all-time high, and then it went down a little bit. Wow. And I want to tell a profound thing that's happened to us when we went to our previous company's get together. We'll leave it at that, but I think it's a very profound thing. So where do you want to start? There's a lot to go
over. Where do you want to start? I could start.
I want to start the China ban.
Let's do it.
I want to start the China or the reban. So just for our audience, so China about 3-4 months ago banned mining. They said, that they're against crypto. The large speculation was that it's not really about crypto, it's about energy usage because we were running low on energy and there's many factories that weren't able to run.
And it's subsidized. Their issue was that they were subsidizing energy, and so they were like, it's not fair that taxpayers are paying for these weird Bitcoin miners.
Yes, the taxpayer unfairness argument, which rings true even in here today. And then so
we should talk about unrealized capital gains that
Yellen we should talk about unrealized capital gains. Yeah, we have a lot to talk about. Oh man, this is gonna be an episode. Woo-wee. I'm excited. I'm excited. Tax my shingles on my roof. There was a great post actually. We'll come back to this, but about Janet Yellen. Basically, let's start here because it's too juicy. We'll come back to the mining. But Janet Yellen came out and said, hey, I think the Democrats are scrambling. They want to pass this infrastructure bill so bad, and they can't get it through. And so they're trying to say, oh, it's going to be revenue neutral. You're not going to pay anything, even though you're spending $3.5 trillion. So you're literally, it costs something. It's not free. Just because you can make it even by raising taxes or cutting spending, but it's not free. You're still spending this money. Anyway, Janet Yellen came out saying that she is thinking of taxing the rich and taxing unrealized capital gains as a way because, the rich grow their portfolios, borrow against their portfolios, never sell, so they never incur the tax until they pass away, and then there's a tax. There's a tax at the end. But Janet said, hey, we're going to tax liquid unrealized capital gains. And I'm going to cue Shimon to tell us why the hell this is a terrible idea.
I mean, yeah. So first of all, the reason why she said liquid unrealized capital gains is otherwise you have to break off some of the shingles from your roof as your house appreciates in value. Just think about it. If you have all of your net worth in the house and then it appreciates in value, if you have to pay taxes on that, where are you going to get the money to do that? And then I had some people, after I posted this on social media, some people reached out to me and said, but that's just like property taxes. No, it's not, because property taxes are paying for something like while it's being used in a certain location, right? So like, yes, you can say as a city, I want to collect property taxes from all of the properties in my jurisdiction. Unrealized capital gains can be basically anywhere, and they could be just like gold can have in unrealized capital gains, right? So there's no utility there. And so that's why they said liquid, to basically exempt real estate from it. And I said what will happen is, just like if this passes, which I'm sure it will not pass, two things will happen. One, there'll be capital flight outside of the US. So, they can't tax it. And for people who say like that US citizens are taxed globally, I mean, it's not necessarily true. If you have good tax planning, what you can do is like give all your money to a nonprofit trust that then has like a gajillion mansions and private jets and chefs that do like your fundraisers. And then you effectively live this lifestyle without having any income and without these things being like taxable. So like, I think what people need to understand about taxes is that it's like not a U-shape, an inverse U-shaped curve, where there's an optimal amount of taxation. If you increase it more than the optimal, you collect less taxes. If you reduce it from the optimum, you collect less taxes. Like, it's intuitive, right? If everything was taxed at 100%, then people would not work. And if everything was taxed at 0%, the government wouldn't get any taxes. So there's this optimum. And I just think that humanity has figured out what the optimum is for each country and each society. I read an interesting post that said, if you normalize for the services that you receive, the taxes are not that different from country to country. So, for example, Europe charges like 50%, 60%, but they give you like free healthcare, free everything, a very robust social safety net. The US charges a little bit less, gives you less of these services. And then there's countries like, Panama or whatever, or, Cayman Islands, they charge 4% or 2%, and they don't give you anything in return. But like, then they tax consumption and stuff like that. So effectively, the rate, I don't think you can play with it. So I think it's more of a talking point by Janet Yellen. But what do you think, Alex?
I think, oh God, I think it's a disaster on many, many fronts. First of all, we're gonna have flight outside of the US. You could argue, hey, well, if you leave the US, you need to sell, right? But no, people can just
Not
move and then
necessarily.
sell.
Yeah.
Yeah, you can move, renounce citizenship, but let's say no one moves. People would just put net new money not in liquid assets, such as the stock market. It's going to cause the stock market to crash. It's going to reduce buying power or buying pressure in the market. So that's terrible. And that's ultimately many people's wealth. 401k.
And also,
Think about
can I
401ks.
open?
Yeah.
I want to open a bracket.
Yeah.
How do you even define liquid? Like, imagine that you say stocks are liquid, but real estate is not liquid. Then what is an REIT, like a real estate investment trust? It's like a liquid way investing in an illiquid asset. On the other hand, you can make the other case where it's like you give your money to a startup, right? That's like illiquid because there's no liquidity. You can't sell the shares of the startup, but it definitely increases in value and you can sell it on the secondary market. So I don't even know if there's a good way to define the word liquid.
I think it's a red herring. I think it's a red herring, and that's what they do. It's just a negotiating position, and they're grasping at straws. Here's someone put this tweet. So let's just kind of go over really quickly for our audience what would actually happen. By the way, just the way we went over what would happen if we increase capital gains taxes and long-term capital gains taxes. And what ended up happening, they pulled all of that back. No shit. So, here's what would happen if they tax unrealized capital gains. Money won't flow into the market, okay? Because, well, it's going to be taxed. They'll find other avenues or offshore. Buying pressure will subside from the market. The market will crash. Oh no, poor billionaires. No, because many people's retirement 401k accounts are tied into the market. So all that's going to crash. The whole generation of not even baby boomers, but the what Gen X, I guess, that's behind baby boomers that are going to go to retirement I won't be able to go to retire anymore because they are the first generation off of pensions into 401ks. It's just a complete clusterfuck. On top of this, there was an amazing tweet that's I wish I thought of this, but it's genius. And they were like, okay, Janet Yellen stopped, after she left her post, basically, before when she was at the Fed, got speaking fees. She got paid $10 million a year over the course of the first 2 years post the Fed. Call it a company valuation of multiple. So she's her own company, Janet Yellen Speaking LLC. Company is valued at 10x, basically revenue, or 10x profit, because for her it's all profit. So $10 million speaking fees over 2 years equals, call it 7 to 10x. Call it $70 million worth of her company is not worth $70 million. Now, they went from 0 to 70 million in 2 years. That sounds like an unrealized capital gain. So Janet Yellen paid 30% off of $70 million. You got 10 million in fees, you owe 14 million in taxes. Go find the 4 million that you're going to pay taxes on. Where are you going to get those 4 million? That's net of your income. It's just like, the left is pulling Biden and all these guys to spend and to push the modern monetary theory, and it's getting so ridiculous that they're talking about Joe Manchin and cinemas, the holdouts and they're hijacking. No, they're the only normal ones. I mean, everyone else is just so being pulled to the left. Like, thank God for them. Just like before, I said thank God for Romney and McCain, who stopped some of the things that Trump tried to do with, for me, with healthcare reform and others. And, we praise some of the other more centrist Republican senators. Same thing here. It's just the left is completely out of control. And what I see, I'll finish with this, and I want to hear your thoughts. I see this constantly, and I wish we can just sit everyone down and show them data, show them charts, and walk them through. And this is the problem with our society. I see constantly from people on the left, and even fairly educated people on the left, saying, "Oh my God, the rich are getting richer, right? We need to tax the rich. The poor are getting poorer." The thing is, folks, the rich are not getting richer. Oh, how could Alex say this? On paper, look at that. The stock market is going up. Elon Musk is worth $200 billion. What the rich are doing is that they're able and they understand how to preserve their purchasing power. They're getting richer in US dollar terms, but only because the US dollar is losing value. So what cost $10 before costs 20 now. So if a rich person had $10 before, but now they have 20, it looks like they doubled their net worth, but they didn't double their purchasing power. It stayed exactly the same. And by the government printing more and more money, the rich retain purchasing power, while the poor and middle class lose purchasing power. So the income inequality is not the rich getting richer, it's the poor being enslaved by the policies of the government. And that's the problem. It's not really about the 1% making all this money. They're making more US dollars. But you know what you can also make more of? Venezuelan pesos, or I don't know, bolivars, or what's the currency in Venezuela? Or during the 1990s, Russian rubles. Bolivars, Russian rubles, which are worth nothing. It was paper that you wiped your butt with. So just because you have 1 trillion Russian rubles, that's the equivalent of 10 US dollars. So you can be a trillionaire Russian ruble, a Russian ruble trillionaire, and it's worthless because the value of the currencies fall.
Yeah, I mean, I have only one comment about a very grave mistake that you made in this whole rant. To put a multiple of 10 in what Janet Yellen made in 2 years assumes that she'll have 20 more years of speaking fees. I don't think she has 20 more years of speaking in her. Apart from that, I agree with everything you said.
Fine, disagree with my multiples. Disagree with no, but it's so crazy. I just wish I could show. When I show people data, they're so stuck in their ways and so stuck in, a lot of the left says, oh, science, science, science. It's not. They don't look at data. The left also doesn't look at data, just like the right doesn't. And people are just stuck in and it's so unfortunate, in their tunnels. And when I show them, hey, look, the dollar is getting inflated. Forget the rest of the world is even worse, but in the US dollar is getting inflated. It's like, guys, it's the poor that are getting screwed. You know, the more
Hmm.
money we print, you know, again, our whole thesis for our audience, our whole thesis, what's playing out is very close to Kathy Wood's thesis, which
Hmm.
basically says that CPI, more or less, and the consumable goods are going to stay fairly flat because technology deflates those. But good luck getting a house. You know, good luck having a real purchasing power for capital assets, and you don't have that. You know, the middle class and the poor lose that, and that's a huge problem. And the rich retain it. It looks like it's going up like this, but it's not. But if you divide it by the Fed balance sheet, it's a flat line, which means that the rich are staying flat and the poor are just getting screwed because they're not
Hmm.
invested in real assets, not invested in markets and Bitcoin and gold. God, what, like, even gold would be better than nothing, than keeping money in the banks. And that's the problem.
Yeah, and the thing that confuses people even more is what you said about deflation, which is the reason why the poor don't quite, they can't really put the finger on what's going on is because, like, if we had a hard money, like a sound money that nobody messed with, the things would get cheaper every year, right? Which means that a poor person keeping the same productivity could, buy more and more per the same productivity. And if people increase their productivity over their lifetime just by the fact that you become better at your job, right? You can produce more, then you get a double benefit. Now, all of these benefits currently are only accruing to people who hold hard assets like real estate, like stocks, like anything that you cannot make more out of. And I think that's what people don't understand, which is that, life, instead of getting better and better, it gets worse and worse. And why does it get worse and worse? Because it's not about the money printing. Like, I could give you a theoretical scenario where the government could print money and everything would work perfectly. It's only if the government could invest the money, in things that are, beneficial to society. But just we know, it's so funny. Like, I have a neighbor here in DC, and her son or daughter works as a senior staffer for I think it's yeah, it has to be the Democrats. And she basically told me, I met her in the hallway. She's like, "Oh yeah, like my kids are having a hard time at work now because like the more the bill shrinks, the more the knives are coming out, and people start, to backstab each other about like who's gonna get the money." And I'm like, that's not an efficient way to allocate capital. Like, you can argue about many things, but you cannot argue that the
Hmm.
government, because the idea is, I'm the more I kind of think about democracy, the more I have a problem with it, because like I understand that everything else is worse, but it's a pretty bad system in the sense that people don't know how to vote for what's good for them. And so necessarily, if it's a democratic process, you will have people pushing for wrong policies, and there's really no way around it except a hard money where, like, yeah, you vote for the wrong policies, you go bankrupt, and then you need to do austerity. And then after the austerity, you don't do the same mistake, at least for the near future. And so, like, I know people hate austerity because they say, like, it's bad for the economy, but, like, it's good for people not making the same mistake twice. And that's how people used to live, on the gold standard. People just, like, there was deflation, the economy was booming. Now, yes, some naysayers will say, like, look, in the 19th century, it was much easier to grow because, like, we hadn't invented a lot of the stuff, and the world wasn't connected, and there was no globalization. So there's this thesis of, like, the more you advance technology, the harder it is to grow. But I'm just saying, like, just doesn't make sense to me that you can play around with the money supply. It just feels that it's not efficient.
Yeah, you know, it's there's a lot there that you brought up. I think it's just, you know, you're saying it's because the government doesn't spend on the right things. I actually think democracy is again, people are going to yell at us for democracy. It's not great. You know, to be fair, it's the best that we have out of all the systems. So we both are big believers in a republic, if you will, in democracy. But man, are people easy to buy off? You know,
Yeah.
and you know, when you do this in the third world, we look at this as Americans and we say, "Oh my God, how could they?" And when it happens here, it's so well hidden and dressed up that we miss it, but it's the same thing. So in the third world, you have elections, And this, in Nicaragua, this happens all the time. Right before elections, you ride around on trucks giving out money, and you're like, "Oh my God, I'm going to vote for this guy. He gave me $100." Right, and then
$3.5
they get
trillion.
the votes. Exactly. And in the US, you do the same thing on a much, much larger scale, but it's dressed in a process and reconciliation and bills, and the government will create all these welfare programs for you. What's the difference between creating a welfare program or just giving you money straight out? Or during COVID, we did exactly the same thing. We just gave people money. It was more dressed up. And we look down on third world countries with these dictators, and we say, oh my God, they're in power for so long, they just go around handing out money. We do the exact same thing, and people love it. You get a check, you get a $1,200 check, you're like, hell yeah, we're protected. But then nobody thinks about what does it mean to get a $1,200 check. Now look, to some families, you definitely need that $1,200 check during COVID. You can't survive. You lost your job, right? It's definitely needed. But for example,
But they
to
gave
this
it to
day,
everybody. They gave it to everybody. They didn't just give it
they
to
gave
people
it
who lost their jobs.
to this day. I get a monthly stipend for each one of my kids. Folks, I am fortunate enough and I feel very lucky. I don't need this money. I would rather donate this money. Why is the government giving me money? I literally can't tell them to stop. I don't know who to write to. If someone knows, please, Alex at hardcorefinance.com. Tell me who I can write to have these checks stop, because someone out there needs it a lot more than I do. I would rather, a struggling family get my portion of the check along with theirs. It's ludicrous what they're doing right now. It's just
Alex, I have an
ludicrous.
idea, and I'm willing to do this for you. But if
Yeah,
you give me $1,200 in quarters,
yeah.
I jogged past the Internal Revenue Service this morning, so I'm happy to just leave it at their doorstep. How cool would that be?
That would be cool. Why quarters? Why not pennies?
Yeah, it's gonna be hard for me to jog with such a weight.
Oh, because quarters are okay, but pennies, like, oh, that's too much.
Yep.
You know what we should do? I mean, I was planning on doing this anyway. We should I'm gonna donate. For our listeners, if there's a place, they leave it in the comments. Where you would like me to donate the money, I'm happy to do this. I'll write out a check and we'll take a picture of it and we'll do it, because I
I
don't
have an
need this
idea.
money.
I
Yeah,
have a
let's do it.
perfect place. Bitcoin
Yeah,
Core developers. There's a
I
place, I
love it.
forgot the name, but like you can donate any amount. Like you don't have to donate like a big chunk. I mean, OKCoin, our employer, is donating a lot to Bitcoin Core developers, and it's great because it's no strings attached. So it's not like a grant where you research something. You just like, here,
Yeah,
take this money and do whatever. Just
yeah.
as long as it's Bitcoin stuff. But yeah, no, and I actually wanted to unpack a little bit this idea of like the democracy. Like, look, there's many good things about democracy. Like the use of force, for example, is much more efficient in democracy. Democratic, governments are usually not bad to their people and stuff like that. It's just the monetary policy. It's almost like a bug in an overall great operating system. But there's this one bug, which is like we shouldn't do central planning. Central planning doesn't work like in anything, but like the money, it's even worse because you can't even see the effects of it. Like I remember when I was growing up in Bulgaria, I mean, after we went to Israel, and then when I would visit, people would say, haha, the prices are going up in the elevator, but the salaries are taking the stairs. That was the period of hyperinflation in Bulgaria. And it was like, a Jewish, like, snarky joke. But I was like, always, wait a second, why is that happening? Because, like, the people who sell the stuff, right, that increase the prices of the stuff are the same people that work in the store and they pay themselves a salary. Like, imagine if you're a sole business owner, sole proprietor, you have one store, you're the only employee, the prices and stuff shouldn't be disconnected. It's only because the government prints money and some of this money goes to inefficient things that you have a disconnect between salaries and prices. But that's if you only have one product and the whole economy is like one person. But it scales. It's the same. Now look at something like El Salvador, where they get all the negative aspects of the money printing because they're dollarized, but they don't even get the positive money, the positive like $1,200 check. So it's really great that they moved to Bitcoin. And I have to say, this is like going so much better than expected. So many things in Bitcoin I first of all, I don't believe they'll happen, but then they happen and they go really, really much better than expected. Three things that I remember: the fork wars between Bitcoin and Bitcoin Cash,
No,
the
it's crazy.
China banning of mining, El Salvador adopting it as a legal tender, Michael Saylor buying a gajillion Bitcoin on his balance sheet and like his stock exploding. It's just like everything's going better than expected, and
Where there's
it's
more, there's more now. Rand Paul came out and said, "Hey, maybe crypto, Bitcoin, could be the reserve currency of the world." Now, look, I don't believe it needs to kill the U.S. dollar. I think they can coexist. But the fact that we're literally like a top politicians talking about it is amazing. The Korea Teachers Pension Fund is buying Bitcoin. The Oregon Firefighters and Police Fund, like pension funds, are starting to buy Bitcoin. That we have two ETFs, not future ETFs. We can talk about why that's bullshit. But the fact that this is the case, SEC is suing Ripple, and the constituents or the shareholders of Ripple are suing the SEC, and the SEC is like, wait, I'm fighting for you, and they're like, get the hell out of here. Like, we don't need you. You're ruining it for us. The SEC is screwed. I mean, it's like, what is happening? It's just, I mean, wow, wow. And I'll tell you, so you and I, to our audience, more to our, the story. You and I, we just came back from Los Angeles. We were on a trip to Los Angeles, and I had this very profound moment, two moments. We were walking around, and we went to a convenience store, and the guy overheard us talking about Bitcoin, and he's like, "Oh, I believe in this and this crypto." And these things used to happen in 2017, and I was like, "Oh man, that's the top," when everyone was talking about crypto. Then we get on the Uber, and the Uber driver is like, overheard, is like, "Hey, remember, he was 60-year old or something like that, Uber driver overhears us talking about crypto." And he goes, "Oh, I hear you guys talking about crypto." And I'm thinking, "Oh God, here we go again." And then the second thought is, the top is near. And he goes, "Hey, question for you. Which language is the best to learn to code on in crypto?" And that blew my mind. It wasn't, "Hey, how do I become rich and buy a coin?" Which language do I need to learn to code on? The narrative is shifting completely, and people are understanding. Last thing I'll say, I was talking to a good friend of mine who just went over to Goldman to do government affairs. It's like, and I was like, "How's it going?" He's like, "I'll just say this: they're hiring me for a reason. The demand is there. People
mhm,
now want it." And oh my God, gold. Now look at gold. It's completely decoupling away from an
mhm,
inflation hedge. Look at gold
mhm.
versus tips, which is like an inflation adjusted inflation adjusted vehicle, and they're splitting now. Completely
Yeah.
splitting.
Yeah, and the interesting thing is, I want to go into on a tangent about technology. So you said in the episode that we made about like why Bitcoin and stuff, that Bitcoin is a technology for money, and like you had different technologies for money, and this is like the best possible technology so far that we've invented for money. But then I thought about there's a very famous technological book called The Singularity is Near by Ray Kurzweil, and he explains why technology is exponential. And basically, he thinks from first principles. He says the reason why technology is exponential and other industries are not is because you always use the latest technology to invent the new technology, right? So, like for example, when you didn't have a computer, you had to use like a calculator to like plan the chips and stuff. Once you had a computer, you could use a computer to plan the next version of the computer. And so it's basically like every technology makes it faster for you to invent the next technology. So I'm thinking about money as a technology. It's so awesome because now that we have this network that's like spreading, it's becoming more decentralized, it's open source, everybody can program into it, then like we can use that technology to develop who knows what. Like I think humanity can develop so many things, even just with the science we currently have. Like we spoke about this on this podcast, like tons of nuclear power plants creating free energy for everybody, 3D printing creating like in abundance and stuff. All of that can happen, but like it will happen on top of this new money technology, and so like
Hmm.
everything will
Hmm.
accelerate. And that's why I kind of agree with Kathy Wood. I mean, and when we talk about inflation, it's important to just understand that it's a vector. Like Michael Saylor says, inflation is a vector. It's not a number. So like, yes, if you just want to like live in a nice house and eat good food, that is deflationary. If If you want waterfront property, that's not deflationary. If you want like a degree from Harvard or Stanford, that's not deflationary. So like there are things where if you want those things, you will just experience inflation because it's very hard to create more. And people say, okay, even when you like can broadcast the Harvard lectures to everybody, there's still value to be able to ask the professor a question. And like the best professors, they just have limited time. And so not everybody gets to ask them a question and hear an answer. So like part of me is very optimistic and part of me is a little bit worried. The optimistic part of me basically says that, even if you can get to the Harvard professor, enough people will learn from him that they can teach other people. So that there are kind of secondary effects to technology, but it's hard. It's hard. I mean, I have, some friends that went to really good schools and they just don't work in tech or finance, and they work like in architecture or other jobs like TV. I have a good friend that's like TV editor for the sports news. It's really hard for them to just survive. And they went to like good, academic institutions in Western countries. So I don't know. Are you more optimistic or more pessimistic? What's your
About
outlook on what's
humanity or about
no,
technology?
just about how the next couple of years or how the next like 10 years will go in terms of like, will life become better for most people? Will it become worse? Better for some, worse for
Look,
others?
I think, yeah, look, I think in the long run it's going to become better. Now, we're at an interesting precipice or an interesting point where uh, there could be two or three things. There are two or three things that need to kind of flow, right? And I'll explain what those are in order for things to go in the short term pretty badly or pretty well. So the Fed and interest rates, okay? Like if they slam on the brakes, that's not going to be good, okay? If they taper, the market will freak out, but it'll adjust. That's one. Two, technology really catching on. Like, we believe it will, but it needs to actually catch. Because if it doesn't, then we are overvalued in the market. Okay.
I mean, can we talk about the fact that Tesla just passed $1 trillion in valuation and Tesla is more valuable than
No,
all the other car companies combined? It happened today.
no, not a trillion yet. Is it a trillion now, or
I
is
mean,
it
I
close? It
read
was
the
800
headline.
something.
No. I read the
Let's see,
headline.
let's see. Oh my God, this is amazing.
Yeah,
Tesla.
trillion.
Oh
I'm
my
looking at it
God,
right
they're a
now. Yep.
trillion. Wow, wow. Amazing. So, well, because people are making fun of it, they're like, oh, well, they got what, 4 billion deal with Hertz, and that 4 billion raised the valuation of Tesla by whatever 30 billion, and idiots. It's not about that one deal. It's the fact that a major car company is buying Teslas, electric vehicles, which allows hundreds of thousands of people to see and use the Teslas,
Exactly. Exactly.
right?
I don't understand
And
how they
then
didn't notice that. Like, who writes these pieces?
it's like when Walmart put Bitcoin ATMs in 200 stores with a plan of 8,000 stores. People are like, well, nobody buys things with Bitcoin. Yeah, that's not the point. You're gonna walk past a Bitcoin ATM in Walmart. It's gonna be normal for people. It's like, oh, Bitcoin. When people say, oh, okay, Bitcoin, yeah, no problem. We've made it. That's the
Hmm.
$1 million mark, and
Hmm.
it's just taking it, to that place. Yeah, the Tesla and Hertz thing is amazing. One, because Hertz can actually save a lot of money on the fact that they have a like a electronic fleet, right, with the price of gas increasing. Tesla is use cases is being proven. And oh, by the way, God, it just kills me how much people misunderstand technology, which is why I love this podcast. And I do think it's a hidden gem, if I may say so myself, because we both of us came from tech. So we understand how to value tech. And it just so happens that in this day and age, tech is what's taking over. Now, look, if we were in tech in 1920s, right, and it was like the steam or whatever, or even before then,
Oil.
1800s, oil is
Yeah.
taking over. Yeah, don't listen to us because it's a generation of like oil, steel, and hard industrial, hard factories. But but here's my point. Without maybe it's a bad metaphor, but here's my point. What's going to happen in the Tesla, other than 100,000 people getting used to buying a Tesla? Tesla's whole differentiation. Tesla is the Apple of cars. It's a closed
Mm-hmm.
garden. Their whole self-driving bet, their bet is on over-the-air updates and self-driving vehicles. Oh, well, of course, and making batteries efficient enough and charging stations and so on. The Hertz deal gives them scale across the board, but fundamentally, most importantly, it gives them scale in learning how people drive in different parts of the world. That's the key. And then when they get the autopilot done better than anyone else, they're going to be leaps and bounds ahead and creates a virtuous cycle. And oh, by the way, how many of us, this has happened to me, when you're talking to someone, inside the room, this happened to us the other day. You came over to my house and you said, "Hey, I'm gonna alpha leak you. I forgot my belt. Can I borrow a belt?" I said, "Sure, Shimon, you can have a belt." You came home and you saw a belt commercial targeting
That
you.
was
How
so
the hell
freaky.
did that freaky?
So
Because you
so
never
freaky
searched
because
for a
I
belt.
have never seen a belt commercial outside of that one day, and I've never searched for a belt on my computer. So it
So
was
the
just
phone was
weird.
listening to you. The phone was listening to you. And what the hell do we think is going to happen in a Tesla car when it's self-driving and listening to the productivity that's happening there? This is why technology is exponential, because it will be first to self-driving, which means more and more people will use it, which means you will learn how to self-drive better, which means more and more people will actually work and talk and do whatever in the car, which means it will learn a whole commute time of people, call it 2 hours per day per person, that it's the no tech has been able to reach before because you're sitting there staring at traffic at the wheel. It's monetizing a whole new TAM. It's like literally
Hmm.
expanding the pie, and no, it's going to get there first.
Yeah,
People
I
don't
mean,
get this at all.
the biggest thing, the brilliance of Tesla, and I don't know if it was brilliance or just like luck or whatever, but they were able to get people to pay them and give them their data. Where all the other self-driving companies, they had to pay people to generate the data, and like they did it by having really good design, by doing like, things that were very, very hard to do. But like that's it. That's the genius of Tesla. Now I don't own Tesla directly. I own the NASDAQ, so and S&P. So I have some just indirectly, but I'm just like, you have to step back and figure out, just like the Rockefeller, where he understood that he can take like something that was considered pollution and turn it into like oil, which is like very valuable, by creating this network of he basically bought all the refineries. So Tesla is doing the same with data about driving. And yeah, I mean, but I think at the end, it's to your point, the productivity that will unlock, that's the deflationary point, right? Like instead of just having to, drive and do stuff that's not exactly what you want to do, you can do exactly what you want to do. And I've experienced self-driving with Tesla. It's amazing. I mean, it's just like it's like magic. It's
And this
and
is this is
no.
the alpha. It's not even a beta right now. It's like, hey, they're testing it.
Yeah, for sure. It was only on the highway between San Francisco and Sacramento, and but still, it was just like so nice. So anyway, I'm optimistic about the future. I think politically, there'll be some choppy waters ahead, but I still think I'm optimistic about the political system of the U.S. more than any other country, probably, because again, people here know how to not miss an opportunity to make money. We've spoken about this several times. And I think it's just, there's still a spirit in this country about entrepreneurship and stuff. Like, even if people fight about how to
Mm.
distribute the spoils of entrepreneurship, at least they don't suffocate it. And at least, like, here, there is this notion of like, you can make it. You don't need necessarily to have family connections, and you don't necessarily have to have wealth in order to get wealth. And I don't think this
Helps.
exists in many countries. It helps for sure. But I mean, I'm saying there's not many countries where you can just start from scratch and like have a very good shot at a decent middle class life. And I think it's going to
Yeah.
continue in the future. That's why I'm not investing in emerging markets, and all my money is invested. I mean, I guess I'm investing in emerging markets through Bitcoin, but stocks, I only own American stocks.
I'm optimistic too. We'll have some choppy waters, but wow, we haven't touched. We started with a whole agenda, and we haven't touched, like, we touched a part of it. Can you tell me a little bit, because I don't know. Can you tell me about this whole China unbanning the miners? God, you're just idiots.
Well, no, I guess they're just, first of all, they banned many things about Bitcoin many times, and I just saw an article that they're like reconsidering now because they were frankly surprised that so quickly the miners were able to get out of the country and back operational, and like the price broke all-time highs. So I think that basically led them to think, okay, we're doing something wrong here. And again, to
I,
China's credit, the USSR was much more stupid. Like in China, they have enough people that studied in the West, and I think it is a little bit capitalistic. Like there are some, capitalistic tendencies there, and so they also see this is not good for the country, just banning mining.
But what miner now is going to be like, oh yeah, I'll go back to China after, it's kind of like you banned in 2013, you did it in 2014, I think maybe 15 they stopped, and then 17 they did it again, and now it's like after a while, now that you've moved out, the biggest hurdle is inertia, right? You need to get all this equipment out. They removed the biggest hurdle and therefore added that same hurdle to come back in. That's a big barrier. Like moving mining equipment is not easy.
It's not
It's not
easy at
trivial.
all, and there's repairs every time you move them. I understand like a certain percentage of your miners break, you have to repair them, and it's not easy to find rack space with good ventilation and good power supply. Like all of these things, it's just like any other any other regulation, right? It's like if you don't have an environment that gives you clarity about the future, you just have a huge discount on everything you do. Like they will be able to get miners back, they'll just have to subsidize the electricity again and offer subsidies that are deep enough that will make up for the uncertainty. That's another thing that's great about the US, where at least people know that the rules of the game are not changed in the middle of the game. And so that's why capital is cheap here. Actually, I want to tell you a funny story I heard on a podcast about why Jews were very good with money traditionally. Like, both Alex and I are Jews, and so we can talk about that stuff. So, traditionally people thought that it's because Christians were not allowed to borrow and lend. That's not true. Christians actually could borrow and lend. But what happened is that the Jewish communities were relatively isolated from the rest of the people around them. So everybody knew each other. But that meant that if you're excommunicated, like if you're kicked out of your community, it was very, very painful because you couldn't just like move to another city. Also, the communities spoke to each other. And so, if you were kicked out of one community, you couldn't just go to another place and start fresh. That meant that when a Jewish person borrowed money from another Jewish person, the chance of them repaying it was higher, which meant that they could get money at a lower interest rate, which meant that like if you go to a Christian to borrow money or to a Jew to borrow money, the Jew could give you a lower interest rate. And that created the whole banking institution, that we're very good at. It's because of trust, and it's because the price of breaking the rules was high. And that's exactly what Bitcoin does. Bitcoin basically says, look, if you change the rules on me and you increase capital gains now or unrealized capital gains or whatever, we just like do one wallet transaction. I don't even have to do a wallet transaction. All I have to do is like call my buddy, tell him 12 words, and now he has the 12 words. He has control of my wallet. We didn't even have to move it on chain, right? Like I could tell the government, sorry, I lost my key. They could look at the blockchain and say, okay, if this thing moves, we're going to arrest you because it's like you lied to the court. It doesn't have to move. All I have to do is give the 12 words to my buddy. Then he can give the 12 words to his buddy. Nothing is moving on chain, so they can't even know that the capital is moving. So in a sense, it's the best possible way to prevent governments from changing the rules in the middle of the game. And that will create a lower cost of capital, which is not intuitive, right? Like you think currently to borrow Bitcoin costs a lot more than to borrow dollars. But that's just because Bitcoin is growing so fast and the dollar interest rate is suppressed. But I think in the long term, the cost of capital for Bitcoin will be lower than the cost of capital of any other instrument that's like, they can change the rules on you. And that would be amazing because that means that, the price of Bitcoin will be very high.
I'd love to come back for one time, like 100 years from now, and just talk to people. I bet you they'll be like, "What? You did Bitcoin was a contentious thing?
Yeah.
Like the money that we used to pay for everything, that was a big deal? How? What were you guys thinking?" For sure, for sure. It's just every single time. It's just interesting watching it happen in real time. But every single time when new technology comes out, people are afraid of electricity, cars, everything. I mean, it's just you want to preserve what you have. It's easier. You're comfortable in what you know versus something new.
But that's why people who make money are people who do stuff that's hard, and taking risks is hard. I was just talking to my wife about this, which is like, it's not the good things in life, like the things that make you really, really happy in life, they're hard. And there's a reason for that, because like if something's super
Mhm.
easy to do, like it's not very satisfying. So yeah, I don't know why I said that, but I just it reminded me of this.
It's like the soups that you make. You take care and you do them for a while, but then they're so good. Shimon made me the soup. It was so good
Yeah,
because
if
I'm
you guys
isolating at
are,
home.
if you guys are wondering why we're not in the same place, it's one of us
I'm
is not
I'm
feeling
isolating
well.
at home. Yeah, well, no, I'm feeling okay, but I was exposed to COVID, so I don't know if I'm, like, sorry, I'm just kidding. There's no COVID here, but I don't know if I have COVID. We'll get tested tomorrow. If I don't have COVID, I might have it. Just don't have any symptoms. Feeling pretty good, but I definitely was exposed, so it's best not to go see anyone. So Shimon, with his kind heart, it was very sweet. He brought me soup. But what you guys don't know is Shimon makes literally the best soups. Like I discounted him for a while, and he made this one Bulgarian soup for me and my kids, and it was delicious. And so then he calls me today, and he's like, "Hey, I'm making this bone broth soup, which is good for you because it's both good for the immune system. I'll bring it to you." And I was thinking, the first one was pretty damn good. This one, at worst, it's going to be average. I'll take the soup. It was phenomenal. It was like really, really good soup. So I need to, I mean, I definitely underestimated your soup making abilities. I'll just say
The
that.
secret is to just reduce grass-fed bone broth with grass-fed butter and good vegetables, and just reduce it until the flavor becomes very strong.
I try to reduce it and everything disintegrates into the water like the veggies. It becomes kasha. It becomes Russian kasha.
No, you reduce it
Oatmeal
before you add the
porridge.
veggies. You do it
So you
before you
boil
add the
it, you
veggies.
boil it for a while.
It's called to reduce.
Ah.
Yeah, you reduce just anyway, it's a hardcore cooking podcast now.
Yeah, but this is good. I'm switching it up a little bit.
What else
Well,
did we
look,
want to
we've
talk
been.
about? There was another big thing that we mentioned that I don't remember. We spoke about El Salvador mining. Oh, all-time highs. We broke
All-time
all-time
high.
highs
ETF.
since we last spoke. I am very excited about this because I remember we recorded last time we broke all-time high at 20K, we recorded a podcast and we said we are ahead of the roaring 20s.
Bitcoin hits all-time high. Woo,
It was
20K. Woo.
20,000. So now we're like more than 3 times the previous all-time high. So that's very good. And I just have to say, it feels very, very good to be able to discover price. Like there's something very cool about like a number never seen before. So I was very happy this last week.
It's interesting. We always have this conversation. We love doing this pod, and I think it just, in crypto, but I think for the first time in both of our lives, we had ideas of investing and different theses and so on. But for the first time in our lives, we kind of saw the matrix, and it was almost as if, we got this really strong conviction about the way the markets will move, about the way Bitcoin will open up or happen. And a lot of things have to go right. It's not just like, oh, happens. Yes, we got it. It's like, you know, if people accept Bitcoin and it's not breakable and other currencies or other cryptos don't beat it to scale, then governments and companies will be forced to buy it because as soon as the first one buys it, others will buy it too. It's like, and then governments and then this, da, 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 da. And for the first time a while ago, even through the ups and downs, we kind of saw where the road is going. And we were preaching. It's not like we kept it to ourselves. We told everyone to the point, like, we lost friends because we said it. We're like preaching, please buy, 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 buy. Now, by the
I
way,
only gained
everyone's coming
friends. I
back.
don't know. I don't know which friends you
I've lost
lost.
friends. I've lost friends because people were like, "Oh, Bitcoin, you and Bitcoin." I would get made fun of so much, and now they're like, "Oh, we should listen to you." Yeah, you should have. It's very nice to look back in hindsight, but the point is, I think for the first time, you and I were both able to project how things would unravel, right? Versus other people would just deny it or didn't want to believe it or didn't want to be curious enough to study it. It's not like we're geniuses. We all the evidence was there, and it feels good. I'm not gonna lie, professionally, just very professionally, in terms of everything that we've learned in business school and in our professional careers culminated in this one in the last maybe 3 or 4 years and in a move. And look, we made a big bet on it, both in terms of investing, which we talk about here, in terms of our careers. We're betting our careers on it. And so it's very satisfying to see Bitcoin and others recover because it's not fun seeing your investment crash by 90%, even
Mhm.
by 50%. It's not fun. I mean, it's stressful. We also have families. We also, have it's like you get these naysayers. Well, you could have sold and you could have had all this money to, spend in whatever, and then your money is gone. It doesn't matter how much you had, even if you had $1,000 and it crashed by 90% to 100, you lost $900. It's a lot of money. So it's a big celebration to see all-time highs, at least for me, because it's such a, and I know for you, it's just such a intellectually and career rewarding thing to have happened, that we projected years ago that
Yeah,
they
one
would
of
happen.
our first podcast episodes, I think, was like, is the halving priced in? I remember.
Yeah.
Like, and this is why this podcast is so satisfying. You know, we've had many guests, we've had many conversations with the two of us, we've had some repeat guests, but the main benefit I get from this podcast is to be able to kind of timestamp my thought process and converse with you. And you know, we have many conversations outside of the podcast, but this is basically undeniable. And then the other interesting thing is the fact that the space is evolving really fast, but I don't think we've gotten too many things wrong. I mean, I'll give you one kudos. You convinced me that technical analysis is not fully bullshit. Um, and that's because I always thought um, my biggest qualm with technical analysis was that it cannot know external factors that happen. So, for example, you know, Nayib Bukele, the president of El Salvador, announcing it as legal tender, no chart could have predicted that. And that was my kind of hang up. And I have to say, I was wrong because I just got the causality wrong, the causality backwards. So a chart, let's say, I don't know, Bitcoin stayed above a certain level for above a certain amount of time and all of these like Fibonacci, whatever, but maybe it had to happen before a country could feel comfortable declaring it legal tender. So maybe the chart could cause things to happen. And then technical analysis makes full sense to me. Another thing I wanted to say where you were right and I was wrong is like with the whole kind of
Shitcoins.
DeFi. Well, I don't even want to call it
Yes.
shitcoins. I was just thinking of like DeFi and all of these things that generate yields that are much higher than just the Bitcoin yield that you can get by, you know, lending your Bitcoin. I was thinking a lot about it, and basically it's like layers and layers of leverage built on top of something real, which is the arbitrage between the spot and the future price, which is a real arbitrage. It's 10% currently, which is 10%. You can leverage it like 10 times and you get 100%. And that's risk free. So you basically sell the 6 month future at like, you know, 10% more than the current spot price is. And then the only risk you take is that the exchange gets hacked, because that means you have to keep those things on an exchange and not hold your own keys. But if the exchange doesn't get hacked, you can pretty much make free money. And so what people are doing with these DeFi protocols, and again, this is not investment advice. I don't have my money in any DeFi protocols, but I suddenly understood, oh, it's not money out of nothing. It's actually just like different ways to package, you know, this one real arbitrage that exists. Now, can that collapse? Yes. Will the arbitrage last forever? No, definitely no. Like any arbitrage in the markets is at the end of the day competed away. But I have to say those are two things I was wrong about. And I think I might have even said it on this podcast that I don't understand these things. And so it's nice to see things that we're right about, things that we're wrong about, and just timestamp them.
Yeah, no, I agree. It's interesting to see how it's all going to evolve, and we can timestamp here Tuesday, October 26th, 10:56 p.m. The next epoch of all this, like I fully believe, and I'm showing you a little bit in the metaverse. What people are building in the metaverse and with NFTs, not, look, art NFTs are art NFTs. You either like collectible art or you don't. I'm not here to say I don't understand it. I don't know how to value it, so it's just not a thing for me. I wish I could get in and make some of the gains or get in and just have a collectible. It's just not my thing. That's okay. I'm not denying the value of it, but the value of NFTs within the metaverse, not art pieces, game pieces, tools that you can lend to someone. Those are NFTs. You have 500 picks and shovel access, 500 access. You have 500 access. They're not like, there's not a lot of liquidity there, 1 in 500. But those things are creating a whole new ball game of the way people are building the new life essentially. That's so exciting to me. So exciting to me. I think next year, 2022, is going to be the year of the metaverse. And wow, the people are going to build some incredible stuff, just like incredible stuff.
Yeah, I think this deserves definitely another podcast episode because the metaverse is something that I'm very excited about. I was never skeptical about it. I was just pointing to things that I was actually skeptical about. But yeah, the metaverse, the first time I heard about it, I was sold. But with that, I think this is a good point for us to wrap. So thank you so much, Alex. I hope you feel better. And yeah, it was a pleasure chatting as always.
Pleasure chatting as always. Thank you for the soup.
No problem, anytime.
Bye-bye.
Bye.